Hello everyone, and thank you for joining this Your Overseas Home webinar. My name is Rosie and I'm a copywriter here at Your Overseas Home. Today we'll be chatting with Sadie Webb from Chase Buchanan about your financial considerations that you should think about when moving to Spain. It's great to see so many of you with us today, whether you're watching live or on demand. Once Sadie's shared her presentation, we'll open up the floor to questions. If you do have any as we go along, please type them in the right-hand side of your screen on the questions tab. We do hope to answer as many queries as we can today, but if we don't get around to them all, please don't worry. Any unanswered questions will be forwarded to Sadie and the team at Chase Buchanan. So thanks for joining us, Sadie. Before we start, could you tell us a little bit more about yourself and what Chase Buchanan does?
So thanks for the introduction and good afternoon to everyone. Thanks for taking the time to join this webinar. Like Rosie said, I'll be introducing myself and Chase Buchanan. I just want to pre-warn you, there is a lot of content to get through, so I will be going through it all quite quickly, but don't worry, we're here to answer questions at the end. So firstly, to introduce myself, I'm Sadie, a cross-border specialist based in the south coast of Spain out of our Marbella office. I specialise mainly between the UK and Spain, but do have clients all across the world as well. And I mainly help clients move in the most tax efficient way initially, and then ongoing relationship with them thereafter. So I've lived in Spain for 4.5 years now, so personally dealt with a lot of these complexities myself. And it's not as simple and straightforward as the UK way. It is a little bit more intricate. So it's good to have, professionals in that. Previously, I was a qualified accountant in the UK for 7 years. So I have a lot of the UK knowledge as well, which really helps me focus on having the knowledge of what British expats go through.
Great, thanks, Sadie. Okay, so I'll hand over to you to start your presentation.
Thank you. So what I'll do is I'll also introduce Chase Buchanan as well. So we're going to go through who we are, our services that we offer, the offices that we have, and then the Spain tax essentials as well. So Chase Buchanan is a regulated global independent wealth management company. We really pride ourselves on providing clear, simple, transparent advice and ongoing support and reviews. We really strive to provide the best level of service in the industry, and that really comes from having the right regulations, right structure and the right people in place. One thing that's really important is having a direct regulation under the European directives, MiFID II and IDD. They don't mean a lot to yourselves, but it's just a really right regulation to have for a financial advisor. It stands for Markets in Financial Instruments Directive and Insurance Distribution Directive. So it's really just an important thing for your advisors to be knowledgeable, and also knowledgeable about Spain and the different autonomous regions, because believe it or not, there's actually 17 autonomous regions in Spain, and they all follow slightly different rules as well. So here's the services that we provide. So I mainly look at, investments. So that would be making sure that your investments are Spanish tax compliant investments. Also looking at the financial planning and retirement planning, ensuring you've got enough money to keep you going for the rest of your life, and any other, planned wants for your monies to leave to beneficiaries. UK and international pension transfers, where relevant, we also look at those. We also have an arm of our business that focuses purely on the US connected person. So if you are US connected and you want to reach out, we have a specialized team that deals solely with that, who have all the right regulation and qualifications to do that. Education fee planning, that might be quite relevant for quite a lot of you. If you're looking at moving overseas to Spain, your children might want to go to international school. So that is something that we will also consider, and also life and critical illness, end of life care, and things like that. So these are all parts of the services that we provide at Chase Buchanan. Here are our offices. So we actually have offices in 10 countries worldwide. We have 8 of those within Europe, and then we have a Canadian office and a USA office. What I think is really important with this is it shows that we have licenses and office in so many different jurisdictions, that wherever you want to move to potentially in the future, we don't know where life could take us from day to day. Things happen and change. So we have experts in so many different places that we can continue that relationship and gain on that knowledge together as a company. So this is where I try to make the webinars quite fun and enjoyable. This is where we get down to the bits that maybe aren't so nice. They're all of the tax essentials in Spain. So let's start with tax residency. It's actually a really important part of this. It's not so simple as just sort of moving. It actually depends on your assets that you have, your personal circumstances, and whether it dictates to you whether you move in the first or second half in the year. It can be very detrimental for tax reasons. So it's very important that you sort of engage with a financial advisor and have these chats prior to moving so that we can make sure you're structured in the right way. Because in Spain, you are considered a tax resident if any of the following apply. So if you spend any more than 183 days in a calendar year in Spain, you are automatically tax resident. Your centre of economic interest is in Spain. So that is not just working, but also like your life, your family, and your activities that you do as well. And also your dependent spouse or children are residents of Spain. So this was put in mainly for the offshore workers to sort of say, if your dependent spouse and children are living in Spain, then you are actually tax resident in Spain. You're not, away from the tax rules of Spain. As a tax resident of Spain, you do have certain fiscal obligations. So that is income tax on worldwide earnings, not just the earnings that you get in Spain, capital gains tax, wealth tax, a declaration of overseas assets, which is called a Modello 720, and also succession tax, which we know is inheritance tax. So there's quite a lot there. And there are actually double taxation agreements with over 100 countries in Spain. So even though you're taxed on worldwide income, that means is that they're actually not going to double tax you on anything. So say you paid some taxes in the UK, then what they'll do is they'll net off that of any taxes that you're due to pay in Spain. So that is a good thing with Spain, especially with the UK, that they do have that double taxation in place for a lot of these elements, which we can obviously help and assist with, and your accountant would also. The one simple thing with Spanish taxes is that the tax year runs from the 1st of January to the 31st of December. It is a calendar year, so not like the UK that we're used to with the 6th of April to the 5th of April. It is one calendar year. And for Spain, they don't actually view split tax years either. So you're either a full tax resident for the whole of the year, or you'll move on to the following year. We have different types of taxes. So we have income tax, but this is split into general income and also savings income and capital gains. So there's just the two types. And then also we have, this is where I discussed the 17 autonomous regions. There are rates set by the state, which are nationwide rates. And then there are also the rates that are regional. So these regional rates differ from wherever you are in the country. And again, we can discuss your personal circumstances with those depending on your circumstances. But these range, as a whole of them, range from 19 to 47%. You are required to submit a first tax return in Spain, and that is due to be submitted and paid by the 30th of June, the year after the December. So that is a little bit, sort of different to the UK, but thereafter your accountant will advise you if you then need to continue submitting returns. There is a personal allowance in Spain. It's lower than the UK, but it is 5,550. But there are also different allowances and additionals that you can get for joint returns, dependent levels of earned income, age allowances, and then also having children of certain ages and dependents, and also for disabilities. They do give you increased allowances there for that. This is the savings rates of tax. So they span from 19 to 28%. And these are the taxes that they would levy on dividend income, capital gains, interest income, things like that. So this is just a national one. So this is separate across the whole country. There is no difference in whatever region you are in. This is one that is set. The next tax that we're going to pop onto is regional wealth tax. So this is a tax that was brought in on the value of your worldwide assets. So what Spain do is they will assess your worldwide assets at the 31st of December each year. And there are some allowances and reductions to help reduce the liabilities. But the standard rate is you have a personal allowance of 700,000 plus a main home allowance of 300,000 per person. So you effectively get €1 million to have as your allowance. Anything over that is due to pay wealth tax on a sliding scale from around 0.2% to 3.5%. So it is something that we can look at, and we can look at negating through different investment options that we have. Different investment vehicles really help with this. It was eliminated in Andalusia and Murcia in the last couple of years, and it is actually exempt in Madrid. That's a lot of the politicians live in Madrid, and we for that reason saw that it was actually exempt in Madrid. But what they've actually done is, once the government sort of saw that the Andalusia and Murcia had looked to reduce this and get rid of the wealth tax, the Madrid government actually pulled in something called a solidarity tax. They didn't like the idea of them being able to just take it away, and they wanted everybody to be on a fairer playing field. So what they did, it was a temporary measure, and it's supposed to end at the end of 2024. But obviously, we're not sure that this could be extended, and it could go into 2025 or extended forever. We're not sure. It was put in for a 2-year term. So we'll wait and see on that. So what this means is it's for net worth over 3 million. So it's a lot of a larger amount. And also you do get your wealth tax liability netted off against it. So if you are paying wealth tax, you won't necessarily be paying them both. You'd just be paying the difference if there was one. But as it says here, approximately 90% of wealth taxpayers will not actually pay solidarity tax, as their net assets are under 3 million. Again, with the wealth tax and the solidarity tax, it's not so simple as just sort of adding up all the value of my house, the value of money in the bank and such like. It's actually a lot more complicated, and each of the assets are valued differently. So it's not something we can easily estimate, and that is something, even with yourself on a pen and paper, we'd recommend speaking to an accountant, and they could give you a broad summary of what they think it could be. This is the Modello 720 that we spoke about earlier, and this is for reporting of overseas assets. So it doesn't need to actually be completed every year. It only needs to be completed once. And then if there are any changes, so large changes, and I think it's changes over around 20,000 euros, you then need to do it. But again, don't worry about this so much. This is what an accountant will do for you. An accountant will submit this for you. It's submit on the 31st of March each year, and well, obviously each year. And what it is it's for any assets that are valued over 50,000 euros outside of Spain at the end of December, the December before. So this can be overseas bank accounts, overseas assets, shares, bonds, life insurance policies, property that you own. All of this has to be put on there. It's nothing to sort of tax you on. It's just a declaration that you have these assets. So there's nothing to sort of worry about here, but it's just that Spain need to know that you have these assets so they can understand that everything is correct. And then more so, obviously, if you do come to sell these assets, there may be taxes applicable, and they will be able to see that then. But again, please don't worry, an accountant will help with a lot of these things for you as well. Inheritance and gift tax. So this is a little bit different to how we view inheritance tax in the UK, because the estate doesn't pay the inheritance tax. It's the beneficiaries that will pay the tax. And you actually have 6 months to pay the tax, and you can't sell the assets to be able to pay the tax. So estate planning is very important. It's something that I focus on a lot with my clients, that you really need to consider when setting up your lives. There are different rates for how close the individual, the beneficiary, is to you as well. So Spain will tax you at different rates for inheritance tax, depending on the relationship you have with the deceased, with the beneficiary. There'll be a table on the next slide, but it's very different. So one thing that is a very important point is, if you are a spouse, you are in one of the higher categories. But if you are a long-term partner, say you've been together for 50 years, but just never got married, you would actually be classed as anybody else in the category. So it's actually really can be very beneficial to have something in place called a pareja de hecho. And what that means is it basically is just with the Spanish government, and they let you know that you're letting them know, apologies, that you are in a long-term relationship. And what that does is it gives you the same tax allowances as though you were actually married. So even though you're not married and it isn't a marriage certificate, you don't have to go and actually get the legal document to get married, but it is as though you were married in the eyes of the law for taxes. So it's actually a very important point to do and look at, because if one of your spouses dies and passes it to the other one, you'd then be taxed inheritance tax on the whole amount with no sort of allowances. So it's a really important thing that we have to look at with estate planning. And also with investments, we also look at sort of, doing sort of joint investments as well to sort of help with this. But the standard rates can go from 7 to 34% on this. And again, it's all dependent on the relationship you have, and they have this multiplier as well. So it's a very complicated calculation, and it's a very thing that this will all be done by, your accountants, your notaries. So again, we have to make sure we're set up correctly, but don't panic too much about it. We just have to make sure we're pre-warned and put things in place for the correct way. Again, with the autonomous regions, the rates do differ. So there are a lot of regions where the inheritance tax has effectively been eliminated for close family members. So if you fall as category 1 or 2, the IHT has actually been sort of near enough. A lot of them are like 99% reductions on them. So there's a lot of different ones, but as you can see here, so Andalusia, the Balearics, Canary Islands, Galicia, Madrid, Murcia, and Valencia, they are all regions where they've got really good tax breaks for IHT. So again, I wouldn't plan on moving to a certain type of certain place in Spain just for the inheritance tax rules, because these things can change very frequently, and if different parties are in power, then these things do change as well. So it's just to be clued up and to have the knowledge, to speak to professionals like myself and Chase Buchanan to make sure that we're set up in the correct way. Here are those 4 categories that we did. So group 1 and 2 are the sort of close family members. So these are really sort of direct descendants or ascendants. And then we go on to group 3, which is other family and also stepchildren. So this is a big one where you have stepchildren. It is very vital that we look at estate planning, because they don't fall into the realms of group 1 and 2 and the close family member. So we have to have a look at really making sure the estate is looked at correctly for your personal situation, because everybody's is so different. And then, as I said before, the group 4, unmarried partners that are not registered as well. So, apologies, let me just take a sip. Been speaking for quite a while. These are some of the pitfalls to avoid. So these are the things just to really make sure we have a look at when we're moving to Spain, to make sure that we've had a look at these before we've moved. So the most important time to speak to us is before you make that move. UK tax-free savings, such as ISAs, national savings and income products, premium bonds, etc., although they are very tax efficient in the UK, they are not tax efficient in Spain. So therefore, any gains on them, you have to report each year and you have to pay the taxes on those. They are not tax-free in Spain, and it works out that they're not very tax efficient for you in Spain. So we would advise and have a look at these with you. It's not always the best advice to sell out of investments, but this is why I would really have a look at your unique situation and decide whether it's right to do it whilst you're still a UK tax resident, and therefore you can get the gains out of there with no tax, and Spain won't tax you on them. But if you sold out of them when you're a Spanish tax resident, you would then have a capital gain to pay on those gains. So it's very important that we have a look at those. Offshore bonds that are not Spanish compliant do not offer the same tax benefits. So they are Spanish tax compliant. Basically just means that they are happy with how they are being treated, and that you will not pay any taxes on sort of the gains until you take the monies out. So all of your gains will carry on increasing, and you don't pay any taxes. That is the difference with a non-tax compliant product and tax compliant product. So again, they're very important that we have a look at these beforehand. The sale of a UK property will attract Spanish CGT. So again, this is where we need to maybe have a look at when in the year you would move to when you become a Spanish tax resident. Where we spoke about previously, the 183-day rule, if you were to sell your house in the year and moved in the second half of the year, therefore you wouldn't be a tax resident until maybe the following year, and that would mean that you wouldn't be liable for Spanish CGT on your sort of principal primary residence that you would sell without UK taxes. So it's, again, something it's a really important point, the sale of UK properties. A lot of people get on the fence with, oh, I'm just going to dip my toe in, see if I like it in Spain, but it can actually have quite a detrimental impact on your taxation should you not do that. So it's something, again, this is a process. I speak with lots of clients and I sort of speak to them ahead of their move and then as they're sort of selling property, and we continue that relationship all the way through to make sure that, we're doing things and the timeline is ticking off correctly. Spain do not recognise trusts at all. So if you're the beneficiary of the trust, you would have to report fully on that trust, and they just do not recognise trusts at all. So that's something, again, that needs to be considered. And the tax-free lump sum, the 25% of your pension available on UK that we see as our tax-free is taxable as income tax in Spain. So that, again, is a real good thing, that if you are over 55 and you're looking at moving, it's a conversation that we need to have a look at together. Do we pull it out now? And instead of becoming a Spanish tax resident and then pulling it out and then having to pay those taxes on it in Spain, it can be, quite a big difference. And some people pull it out but don't know what to do with it. At that point, we can put it into sort of Spanish tax compliance savings, and we can have a look at that as well. Okay, checklist. So one thing that I've not sort of mentioned is wills as well. So one thing with wills is Spain operate a forced heirship system. What that means is Spain will decide how your assets are distributed upon your death. So it's very important that if you want to decide how yours are distributed, most people choose to leave it to the spouse and then the children or such like. In Spain, it's usually around a third to the spouse, a third to children, a third at your discretion, but it can change. But if you do want to be able to make your own decisions, as we all feel that, rightly so, that's our monies and we want to see where it goes, then it's vital that you have a clause put in from the notary or the lawyer that does your wills that states that you wish for your estate to be distributed under the laws of the country of your nationality. That means they will do it under English and Welsh law, and that means that you can actually dictate where your assets go as well. So it's a very important thing to have a look at. And just this final checklist, we are nearly finished, don't worry. One really important thing that people don't actually understand is UK IFAs are no longer able to offer advice in the EU. So when you move to Spain and you're sort of at that boarding gate, they're saying bye and waving you away, because unfortunately since Brexit, they no longer have passporting rights into Europe. So it's a very, very important thing. And they are able to get a European license, but we actually don't know of any yet that have done. So it's something that if you have got a UK IFA, let them know your plans to move. We can work alongside your UK IFA. I've done that quite a lot with clients that are moving, and we can work and get a solid, a solid plan together for your move to make sure it's simple, straightforward, and tax efficient for you on both sides of it. So review your savings investments and UK pensions so you understand your options. Make sure you do that. If you do intend to sell your main residence, you look to complete that before you become a Spanish tax resident to avoid capital gains tax, and also seek advice about estate planning, as the UK and Spanish systems are so very different as well. So yes, our strapline, trusted advice made simple, and hopefully I've managed to simplify a little bit of the Spanish taxes. And apologies, thank you for your time and getting through this with me. There was a lot of information to listen to, digest, and it is all generalized advice. Obviously, it's not down to your personal situation. There are caveats and exceptions as well to some of the rules, but they are to your personal circumstances. So here on the screen now is my QR code. So the lovely lady in admin managed to get me a QR code. So if you scan that, that will take you directly to my diary. So you can book in a call with me into my diary via that link. There's also my email address, the good old fashioned way, if you want to use that, and my work phone number. So if you want to take a photo of that now, so maybe you don't want to right now, but then you've got my details. I know they'll come out after, but at least then you've got them. And what we can do is any of the sort of personal questions we can look at in more depth together, and have a free consultation with myself. None of that is charged at all. It's a free consultation to help yourself.
Wonderful. Thank you, Sadie. Some really interesting information there. And like Sadie said, there was a lot to go through. So did you want personalised advice? I do encourage you to book an appointment with Sadie. We have had a few questions. So if it's okay, I'll fire away.
Absolutely.
Lovely. Okay. Suzanne is about to take an annuity. Yeah, I've said that right. In the UK with Scottish Widows and hopes to move to Spain next year. Will moving make any impact on my monthly payments?
So again, that is something that maybe we should it's quite a personal one, and it depends on that situation. So I think let me touch base with you after the call, Suzanne, and we can just have a little personal chat about that one as well. But
okay.
Pension income from the UK will be taxed here in Spain. So as a generalised thing, pension income will be taxed in Spain. So any UK pensions, any UK earnings will be taxed here in Spain.
Okay. Lovely. Janet's asking, is there a tax-free investment in Spain that's kind of equivalent to the UK cash ISA?
Yep, so we offer different Spanish collective investments, so that is something that we can offer completely, and it's something we look at doing. So it's sort of comparable to the ISAs, and we can invest them as well for you. So yes, that's definitely something we do, and they are tax compliant, tax efficient in the country as well. So yeah, we can pick that up after, and that is something definitely we can offer.
Okay, lovely, thank you. Sebastian's asking, he has an EU passport and is thinking of spending more than 6 months in Spain next year, but then return to the UK. Would he be tax resident for that year and therefore taxed on savings, ISAs, that kind of thing?
Yeah, so if you spend over 183 days in the country, you will be considered as a tax resident. So in that year, you will be a tax resident. Again, depending on your region where you move to, depends if wealth taxes will be relevant or not, because of each autonomous region is very different. But yes, any time over 183 days will be you will be a Spanish tax resident, and therefore you will have to pay taxes in Spain. Also, obviously, you'll have to look at sort of the visa requirements as well if you do have that.
Okay, lovely. And Vitaly's asked, how does the double taxation agreement work between UK and Spain? So what decides that where you would pay that tax?
Okay, so what the double taxation does, say for example for income tax, say that your pension was taxed in the UK. If you live in Spain, you are due to be taxed in Spain. But what the double taxation does is, say you are due to pay €1,000 and you've already paid 800 euros to the UK, they will net that off and you just have to pay the difference of 200 to Spain. So they then deal with that between governments. But what it means is you don't pay the same tax twice, but you will always be taxed. If you're living in Spain over 183 days, you are tax resident in Spain, your tax is due to be paid in Spain, but they will net off anything you've already paid in the UK.
Okay, good to know, thank you. And in terms of if you're looking to buy a property in Spain, what would you say is the best time to get in touch with yourselves?
So again, it just depends on before you're moving. I would always reach out. Let's have a chat. After this call, I've made sure my diary's free for the next week or so that I've got time to speak with you all, and anybody that needs any assistance. It's always worth having a chat. It's never too early. If we then go, actually, it's not going to be a while, let's reach out again in 6 months, 12 months, and we can speak again then. So it's never too early to be prepared. And I think it's a very good thing to make sure that we are prepared ahead of time.
Okay, lovely. Thank you. And just one more question. What would you say are the top, let's say, 3 main tax considerations for someone moving from the UK to Spain?
Okay, so what I'd sort of go with is main home. Have a look. If you are moving to Spain, then the main home is a big one because of the capital gains on it. It can be a very important thing to have a look at the timing of your move. So the main home, firstly, about the sale of that. Pensions as well. We need to check if your pensions are still structured in the best possible way when you do move. Sometimes they will be, but other times we'll make a recommendation to do something different with them to be, now you'll be living in the EU. And then also ISAs. So ISAs and sort of investments, have a look at those and let's get them sold out if applicable. Let's have a discussion about those and really assess them and maybe sell them out before you become tax resident to make sure that you're not getting any taxes, unnecessary taxes that you don't want to pay. It's a very important thing for a lot of us, that we don't want to be paying taxes that we can avoid paying legally. It's all above board and legal, but making sure that you just structure your timing to make sure that you're not paying unnecessary tax to the government.
Yeah, definitely. I think one thing that always sticks in my head that someone from Chase Buchanan actually told me was that you do have to pay tax, but you don't have to tip. So if you're on the same lines, then we do encourage you to get in touch with Sadie directly, and you'll be able to discuss your requirements in detail. Okay, so that is about all we've got time for today. Thank you, Sadie, for sharing your knowledge today, and thank you to all of our listeners for joining us. Before we finish, I would like to invite all our viewers to leave us a review on Trustpilot if you did find this webinar helpful. Something should have popped up on your screen. Thanks again, Sadie. It was lovely speaking with you, and happy property hunting for all of our guests.
Thank you, everybody.
Okay, bye.